All right, welcome everyone. I am a minute or two early, but hopefully you guys don't mind. I thought I'd just jump on this. I was actually busy earlier. I probably should have done this earlier because the markets have had a crazy day. We're going to look at what's been happening over the first 2 hours or so of the market being open over in the US, because that's where most of the fun is happening. We've also had the whole big crypto crash happen. There's a number of different things that are causing that. We're going to talk a bit about that as well. I have made my cup of tea and I'm ready to go. I'm going to have to occasionally have a drink because I've got a bit of a husky voice this morning. No, this afternoon. God, it's been a long day. I don't have the baby sharks. Somebody's been asking on my cup. That was a temporary upgrade to my cup, courtesy of my son, but it is reverted back to just plain orange at the moment. We're just gonna go and talk about all of these things. Let's first start with the stock market, because if you've been following the stock market, it's been pretty nuts. I really wish I could be buying more. I will be buying more later, but not a lot, just because I don't actually have the cash this month to go and buy more. I had other priorities to sort out. I do have on my phone, I have a bunch of free shares, because on Wednesday FREETRADE do free shares. But what they do is when you get those free shares, they give you a little pop-up on your screen, and it takes like a few seconds, and you have to click done, and then you have to wait for the next one, and you have to click done. And so when you just get one or two, it's okay, but when you get a lot, which I get a lot, I get like hundreds of them, the app crashes and it takes me a couple hours to get them. So I'm going to be enjoying that activity later. That's how I get paid. That's how I get paid for doing this stuff. So thank you everyone who has used my free share link for FREETRADE. I really appreciate it, even if I have to do that. Anyway, let's go and talk about what's happening in the markets. So this is the S&P 500, and you can see that normally, not normally, over the last few months, even when the tech stocks have been having a big sell-off, we've been having a very limited impact in the S&P 500. But over the last few days, even that has been seeing the hits. And I talked about this 3 weeks ago. There's a number of different things that are overlapping. I made a video. Nobody watched that video because it's boring. It's like, you know, not Safe Moon, and it's not some crazy cool stuff, so nobody really wants to watch it. But I talked about a few different things. So there's the whole likelihood of the tax coming through, and obviously when every single week that we get closer to the end of the financial year, if this tax proposal from Joe Biden does come through, and for anyone who hasn't been paying attention, Joe Biden is trying to increase the level of capital gains tax for the richest Americans who earn roughly over $400,000, and that means that they will go from paying roughly order of magnitude 20% on capital gains taxes today to 40% if that bill passes both houses, which nobody knows if it will. Maybe it'll get amended, but it actually went a bit higher than expected. I think people expected that it would be just under 40. I think the final version that was published is taking it to about 43%. So unfortunately, that means that if that does come through, if there is a likelihood that this is actually going to materialize, then we run the risk of a lot of these rich people who just happen to be the bag holders on all of these biggest companies in the S&P 500 and generally across the American markets, having to make a choice. Do they go and sell their positions they've been holding for years and decades in some cases and bank that cash at 20%? And then potentially, you know, a few days later, within the realms of the law, you know, maybe a 30-day window later, go and rebuy those exact same stocks, so that then the 40% only applies from that point onwards? Or do they hold? And there is a big expectation that this might have a bigger impact than people maybe have expected. But then there's all the other stuff. There's inflation, which is hitting tech stocks really hard. And I kind of was surprised, because when it was first announced that inflation was much higher than analysts anticipated, analysts thought it was going to be high. Analysts thought it was going to be 3.5%, 3.6%. It came out at 4.2 on all items. And when you exclude food and transportation, it was at 0.9%. And, you know, like these are very, very high numbers that we haven't seen for a long time. And when we have seen them before, they were very short-lived, and there's an expectation that maybe these will last potentially until autumn. But anyway, the inflation aspect is another thing that's really bad for tech stocks, which just happen to make up a huge proportion of NASDAQ 100. They also make up, obviously, a large proportion of the S&P 500 as well, because those stocks don't earn money today. Those stocks earn their money at some point in the future. You know, you're basing evaluation not on today's revenue and profit, because for companies like Tesla, that's too close to zero, but you're really basing it on what you think they'll be earning in 5 to 10 years time. And that's why the multiples on those kind of things are crazy. But what that does mean is if you are using those earnings and profits in 5 years and 10 years time, then when you're working out what the value is today, you're going to be discounting by a much higher rate. And it's not a linear relationship. It's not like if the inflation goes up by like 0.5%, then you're going to be discounting by 0.5% more. So it's like slightly lower valuation. You suddenly have a much harder decision, because when inflation jumps, suddenly you are able to earn considerably more money in relatively low risk ways elsewhere through bonds, like, so that's why everyone talks about 10-year bond yields and all of those kind of things, because suddenly the amount you can earn goes from like 0 to, I can earn maybe 2%, but with pretty much zero risk over there. And so like people who hedge money and have different asset classes, they have to rebalance their distribution. So for example, like large investment funds who have different types of things, pension funds, all of these kind of organizations. And that's how all that kind of stuff plays out. But anyway, thank you very much. People are saying great title. I don't know why it's not February, but I thought, why don't we go with something a little bit on the amusing side? So I'm going to be buying a bit more stuff later once I've cleared these free shares. Unfortunately, I don't have the cash right now. I wish I did. But I'm sort of running a little bit dry at the moment. I'm not going to go into the depth, but some of my affiliates are not very kind in terms of like not paying money. That's how we live, us YouTubers. Anyway, let's talk about the stock. So first, let's talk about Tesla. Tesla is down, and we're talking, they dipped below 550 over here, and I think they didn't quite since then, but that was an unbelievable price if anyone was watching that, because my valuation on them really pretty much still stands. I actually had a relatively conservative view on what I thought they would be doing based on I made a video some time ago where I talked about my valuation. My valuation had a relatively conservative ramp up of the China factory, but it might be a bit lower if I was to redo that projection today, because if you haven't heard, there's been a bunch of different news circulating around their Chinese factory where the government is not being as kind to Tesla as they once were. They don't want them to export the cars from the Chinese factory. They want them to kind of work for the Chinese market, potentially other Asian markets, but Elon was looking at the China factories potentially being a big supply hub to Europe, and that potentially may not be happening. They've cancelled their plans to buy a plot of land right next to their Shanghai factory, which was half the size of the one they already own. The thinking was that they would use that extra plot of land to be building their Model 2s, which potentially would be sold across Asia and in Europe. And the question mark is, are they going to build a new gigafactory somewhere else in Asia? Are they going to go and make more progress in Berlin? Elon Musk is in Berlin. I think he flew there yesterday, day before. So are they kind of figuring out how they can accelerate that, or maybe go and double up and build more stuff there? There's a lot of interesting questions there, but it's probably not quite as positive on some of those outlooks, unfortunately, as it once was. So we'll have to see about that. But having said that, I think my kind of expectations on the Austin progress and the Berlin progress is roughly on par with what I was thinking, because everyone else was kind of really thinking, they're going to begin selling cars in June or July or Q3. I delayed all of those, and I had, I think, a very small amounts being produced in Q1 next year in my model. According to that model that I personally am quite happy with, if I excluded their energy business altogether and all the other stuff like robotaxis and everything else, if I just set all of them to zero, I still had a target price for me. This is my personal target price. You need to do your own research. Do not listen to idiots on YouTube, especially if they're trying to tell you to go and buy something. So don't do that. You go and do your own research. I'm just rambling about my own thinking and my own ways of looking at these things. So my target price was about $1,800, just over $1,800. So the fact that it's now jumped down so much, I am just itching. So the moment I can go and lay my hands on any more shares, I will be doing so. The next one, I talked about them recently in a bit, and in my video of Man versus Market, the series that I've been doing, I put a bit of money into CCIV. So CCIV is kind of weird. They had some negative news recently, but their share price kind of went up as a result of those negative news, if people haven't been hearing. So one big set of negative news has been the fact that they filed a bunch of additional paperwork with the SEC. You can go and Google, like go and Google CCIV SEC. You'll get a bunch of paperwork you can go and read. It's very, very interesting to read because I read it. But Some of the interesting stuff with CCIV, one piece is they're delaying to Q3 the actual merger, and there's kind of question marks that people raise as to why is that happening, etc. But then there was the second piece, which I think probably was bigger for the share price, that everyone went crazy. The CEO of of Lucid Motors, sorry, went on CNBC, I think it was, and did an interview, very brief interview, where they kept asking him, are you going to be producing the 6,000 cars that you said this year, and are you going to be producing 20, whatever it was, 24,000 in 2023? And he was extremely elusive in that interview. Go and look it up if you're interested. And everyone took that as a massive downside. And when I watched it, I actually think I was like the only guy, again, don't listen to me, you go and do your own research, the vast majority of everyone out there disagrees with me on this point. But I took it as a very positive sign for a few different reasons. The first big reason that I took it as a really positive sign is these guys are having a delay to the manufacture of their cars, and they're having an issue with setting up the automated production in the factory. They've already made, I think it was roughly 80 cars, but a lot of that is sort of by hand, or, like without full automation, without the full automated line working. So they've kind of made them, and you can go and look at, there's loads of videos. All the big like auto journalists from have been riding in them. Some of these like 50-minute, 1-hour rides or so. And there's lots of reports, lots of videos and photos of their HQ is around San Francisco Bay. It's actually to the north. It's not in the Silicon Valley where most of the others are. So they have to cross the Bay Bridge to get to where everyone else is. But there's a lot of these cars driving around, putting on the miles, doing testing, and they're sort of like at the moment going through this, building the thing that will automatically produce these cars. And that is an incredibly difficult task. Tesla took years with their Model S to ramp up the production level to any kind of reasonable amount. And these guys saying, okay, well, we're going to be a quarter two down. And I'm perfectly fine. I was never in my mind expecting them to do that in 3 months, despite what they're saying. That's just my personal view. I don't really care. But the biggest thing is, for me, people kind of said, oh, he's being elusive, he's not answering the question, but this guy is a seasoned exec. So he is the guy behind Roland, his surname is Rawlinson. He was the chief engineer for Tesla when they were designing Model S. He knows when he should and shouldn't say things because, the merger hasn't completed yet. He has made previous statements which are now coming through as being incorrect potentially. And I am perfectly okay with a CEO knowing when they should and shouldn't open their mouth. As you can see with Tesla price, Bitcoin price, and a bunch of other stuff, things can happen when the CEO just goes and says whatever is on their mind. And Tesla has had some really big drops as a result of that. He is very careful because he doesn't want to get implicated. He doesn't want the business to go and lose a load of money. There's a whole load of lawsuits around because people are saying, oh, they made a statement and it is no longer true. And they would have to prove in court that the original statement was definitely intentionally misleading and not true at that point in time. I'm not sure if that's actually going to happen. I don't think it really matters because their cash is incredibly good and solid. So I don't really see any big issues. Anyway, so I am continuing to invest in CCIV. Just this week, I bought more in that video where I talked about stake. By the way, if anyone wants to go and try stake out, you can go and use my link, and I'd really appreciate it. Thank you so much. If you do, you get a free share, and the cheapest one is GoPro, which is about $10, which is not bad. You only have to deposit 50 quid to go and get started. I actually like the app a lot more than I expected. When I first was going to try it out, I was like, another one of those. I like it because it is different to some of these. So for example, this is Trading 212. The one that I'm showing you on the screen, the one I'm talking about is Trading 212. And I really do like Trading 212 a lot. There's a lot of really nice things about it. But the thing I like about stake is that it caters very much to long-term investors. Just the way it's designed, it doesn't have the live trading data, but it's not aiming at that market, even though it probably is quite good for that market because the fee structure is actually better for active trading than all of these apps. But I think they've intentionally structured it so that it wouldn't be very kind. You have to go and look at the data elsewhere. You only get 5-minute bars instead of like 1-minute bars on the data, and the charts are small. You can't make them full screen. It doesn't have the whole like trading platform. So I think there's intent in there, but I really like the app in terms of the execution's neat. I like the fact that the prices are good, the spread is good, they're fast at doing the executions, and I like the presentation. It's just, it grew on me massively. So anyway, I'm blabbering. So I'm going to do more videos where I use them as well, because I quite like the platform personally. That's why I made the video. None of it is sponsored other than the affiliate link, in case anyone, because I got somebody asking, are you being paid by them? I know that a lot of other YouTubers do get paid by a lot of platforms that they go and do reviews on or series on. You might have seen some of these series of people trading with particular platforms, and they get paid for it. I will always say, if I get paid by somebody, I only had 3 videos that have been sponsored, and I mark them as sponsored and put a big front disclaimer when that happens. So anyway, waiting for deposit is annoying. I agree. Jacob is saying it is really annoying. That's like one massive downside. There was 2 or 3 downsides. I highlighted them all in the video where I did the beginner introduction to them. It is really annoying. You have to wait a whole business day essentially. So if you put it in the morning on a business day in the UK, you have to wait until the next business day in terms of US trading hours before you can go and use them. But and it's not going to be there for the start. It's going to be there like sometime after the market's open, which is a bit annoying. But that's the way it is. Anyway. Let me see if people have any interesting comments before I go and jump further. There's a few people telling me that I need to go and buy some crypto. I'm guessing I attracted a few people through a few videos that you might have seen that maybe don't really want to go and watch my content, are not actually interested in personal finance. I kind of just had to do it. The reason, so a few people have been asking, why have I been making SafeMoon videos? I made a few SafeMoon videos. In case you haven't seen them, one of them I made 10 days ago, and it is now my most viewed video ever. It has 60,000+ views, which is not a lot. It's a lot for my tiny channel. But the reason I made it is because that thing went from nothing to being one of the most talked about, if not the most talked about cryptocurrencies in about 2 months. And there was a few different things that I really specifically felt was really important to talk about with that one, because the structure of it is different to some of the other cryptocurrencies. That's the reason why I made the video. I don't really care too much about SafeMoon specifically. I don't know the developers. I don't have anything against the developers. I know nothing about them. I mean, I've done my research and I know a lot about their background, but I don't really know them as people, right? So it's one of those where, like, I was concerned that so many people, including people that I actually know, were like jumping in, trying to buy a whole load of this stuff, where specifically the design of its protocol, and I went and read the code. You can go and get it on GitHub if you really want to. I'm a mathy guy. I develop stuff. I do C and like web development and stuff. So I've read it, and there are things in there that are fundamentally different to like the popular cryptocurrencies that most people do know, like Dogecoin or Bitcoin, that make it not useful as a method of transacting value. Even theoretically, that introduce huge risks because the developers have access to large wallets that hold lots of money, which creates massive liquidity risks if that ever was used for any other purpose, which can theoretically be, which the audits, etc., certified. And there's just like the fact is its price rising structure, which I explained in a video earlier today, is specifically based on a Ponzi scheme. I explained the math behind why it is. This is not just like me just thinking something or throwing something out there. There's literally, like, I explained the exact math. I explained why the price can't rise through reflections, which is the most common reason people said. I explained why the price can't rise because of the number of coins reducing over time through burning. So there's only one other way that it can actually go up, and only one other way that it has been going up. Anyway, I'm not going to go into the depths of that. That's why I've been talking about it. There's a whole load of other rubbish floating about it, like they're introducing an exchange and a wallet. And my question is, there's already loads of wallets and loads of exchanges that work with all the different tokens and cryptocurrencies. In fact, the Trust wallet seems to be almost exactly the same as the one that they are proposing, except for they added a picture at the top. The rest of the design looks identical. I don't see the benefit of there being one that is reduced or biased or limited to one particular cryptocurrency when you can have dozens, really good ones that already work to all of them. So I don't really understand. It's like lots of marketing hype. And it's really frustrating because there are laws that the SEC have in place which limit the hyping of assets by the people who stand to financially benefit / owners / developers of those assets. So as a result, all of this hype is apparently according to the information out there, being done entirely by the owners and by the people who are invested, and not at all by the developers. But it is questionable from my mind as to why somebody who is just a regular holder would go and spend the amount of money required to go and put up ads. I mean, they do go on early in the morning on Times Square, on the big billboards and stuff like that. There's clearly something a bit strange going on over there, because even if you hold a lot and you stand to benefit financially from it going up, would you spend that kind of money on putting ads if you were just a regular normal holder? I don't know. You make your own determinations as to what's going on over there. Anyway, let's talk about something exciting. So a couple of interesting ones. So if you look at Google and Apple, these guys just don't do what everyone else does. So you can see there's a drop, right? You can see there's a drop just like with everyone else. They're sort of like coming up maybe close to where they closed. But look at the scale over here. We're talking a drop of like, what is that, $20 on a $2,200 share price. So Google doesn't really care about these kind of fluctuations. And neither does Apple. These are the guys who, so it's dropped like, what, $1 so far. So these guys are the ones who are sitting there propping up the S&P 500. They're propping up all the indices. These are the tech guys that within the whole tech space kind of sit there going, yeah, everyone else is 5% down. We don't care. We're just going to continue doing what we're doing. And that's because they've reached this kind of scale where the fluctuations don't hit them as much. And naturally enough, maybe 3 or 4 years ago, this would be different for Google in particular, but now these guys are beginning to post real revenues and real profits. So the whole like inflation-based discounting and the risks around future earnings and stuff like that don't apply to them as much as they do to a CCIV or to a Tesla or to something else like that. Palantir has been in the news in a lot of different ways recently, and their share price, oh my God, we're at $20. If you've been following Palantir, their share price has been yo-yoing like nothing. So I'm holding a bit of it. I actually know a few people I studied with, because I studied math at university. A few people I studied with actually have gone to work at Palantir. They are incredibly difficult to get into. Like, you have the smartest people battling it out to try to get in. They are dominating the data space and the data analytics space. They're essentially building like a giant, all-powerful data analytics processing capacity that, like, US military or the European military are buying into, giant corporations are buying into, because they can do stuff and present insights into data and all that stuff that nobody else really can. They're sort of becoming the dominant force in doing all of that, and sort of becoming irreplaceable almost. But the share price has been tanking. Been a lot of different reasons why. I'm not going to go into the depths of that, but I'm quite a fan of that, because at $20, I'm personally going to be buying a bit more of that as well. And stake, you have to pay capital gains tax. Vin P is asking. Yes, you do. So stake doesn't offer an ISA. That's the other big downside that I highlighted again in the introductory video. That means if your gains in any one financial year go over 12,300 quid, that means you will have to pay capital gains tax on that excess. I am guessing that a lot of people probably won't be having that much of a gain, but like for me, I will be maxing my ISA anyway. So I'm kind of like, I like using the different apps, and also it helps me having all these different apps because I can follow and tell people when there's interesting stuff going on, but also they're cheaper. And so it's one of those where there is a risk that you will have to pay capital gains, but I have a whole video where I explain how you can go and minimize your capital gains tax or not have to pay it, even if you are going to be getting high gains. Some tricks that people can employ, so people can go and check that video out. There are ways, and you can kind of limit the gains within financial years in ways. It really only applies if you're going to be, remember, this is gains, not sales. So if you invest, say, like £100,000 and you make a 10% return and you cash the whole thing, that's still only going to be £10,000 worth of gains. So I'm guessing that the majority of people are probably not going to be liable for the 12,300 like plus capital gains tax anyway in most normal scenarios. It's probably like the ISA thing is nice, but for the majority of regular people earning regular amounts of money, it probably isn't that material, and the price, so the price of being able to trade is actually more important. And it depends. It depends on people's situation. Some people invest like 20,000 every single year, and then they invest in high growth stocks, and then their portfolios get really big. And if you're then going to be withdrawing it all to say go and buy a house or something like that, then you don't want to be paying the capital gains tax. I get it, and that's why I talk about trading 212 as well. So yeah. What else people are saying? I think I need potentially some moderators for this chat. I think in the future, what I might be doing is I quite like the model that Meet Kevin is using in some of his stuff. I'm actually a big fan of Meet Kevin. I learned a lot about YouTube from Meet Kevin. If you haven't heard of him, go and check his channel. He's running for governor of California at the moment, which is funny. But he has limited his chat to members only. I only have like 5 channel members at the moment, so this chat would be very, very quiet if I did that as well. But maybe in the future. By the way, today is going to be a pretty big day as well. A little announcement. I am have I done it yet? Today I am gonna be crossing the 20,000 subscriber mark, which for me is a pretty big achievement. Thank you so much to each and every one of you who has subscribed, and I have about 9 to go. So if you're watching this, I have literally 9 to go at the moment. So if you're watching this and you haven't subscribed yet, and you want to help me get across the line, I'll be very, very appreciative. Thank you very much for hitting that subscribe button. So anyway, let's talk a bit about more. So on the tech stock front, let's talk about some of the other ones. So today, one company that I am invested in, and I even made a video where I talked about them amongst a few other companies at one point, is Take-Two. They actually opened up today. I think, like, if you looked at it, there's this like Nasdaq and S&P 500 heat maps. It's if you watch CNBC when the markets open, they do this thing where they have the little squares for each of the different companies, and they color them in red or green if they're up or down or up, and then gray if they haven't really moved. And today, pretty much everything was red. And I think there were like 5 or maybe 6 companies that were green, and I think Take-Two was one. I can't remember. Anyway. I have some really interesting long-term views on Take-Two. What are they doing? They're not doing too much at the moment. Oh, I've got my scale all wrong. I'm not going to bother playing around with that. Anyway, let's talk about some of the other tech companies. So Pinterest is an interesting one because they've dropped massively in value recently. And if you've not been, let's have a look at this over here. I'll just show you what's been they were up there in the 80s pushing $90, and we're talking about a share price of 58 over here. So if I go and look further back, we're talking a share price that was beginning of November time for them, and I am extremely bullish on them for the long term. Their problem is they're in this like very early stage. Google was at this point at one point where they were like yo-yoing up and down. But these guys have a unique combination where if you don't use them, if you don't use Pinterest or you don't like Pinterest, then you won't like really think, like, I'm not really their target market. I don't use it. I don't like it very much. But they have this unique proposition where they have a market which appeals to very strongly to demographics that are incredibly valuable. So their biggest target market is middle-aged US women. And I'm not being sexist or anything. This is their the demographic. The demographic, I think, runs very strongly in the sort of like 40s, 50s, a bit in the 30s, and very female dominated because it's a very visual kind of platform. And for anyone who hasn't used it, it's like a platform which is a combination of search in a way. It's, some people say, the 3rd biggest search engine in the world in terms of like volume, but it works in an entirely different way. But it's also a sort of like social media / like way of storing information and stuff, and it's completely unique, and it super appeals to people who, this is the beauty of it. a segment which tends to control the budgets, especially in some high ticket items like travel and household budgeting and big purchases and stuff like that. The target demographic tends to be the people who manage a lot of those financial decisions. So there's a lot of advertising potential in there, and they're just beginning. Like, they've had a lot of tech issues over time. Like it's slow sometimes, it doesn't work sometimes. Their analytics is like, they only launched some of their services in the last few months in terms of like basic analytics and advertising platform. I think there's a big potential for these guys, and I'm very excited. I'm going to be putting more. I should have probably added them to my stake portfolio, but the problem is, I think they might, like, I don't know, they might begin doing some really good stuff in the next 12 to 24 months, but they might also take 5 to 6 years. And I don't think I was kind of trying to be a bit strategic with my video of man versus market, where I was saying, okay, well, how can I go and pick companies that have a higher chance of maybe in the next 2 to 3 years begin jumping up? And with a company like that, I'm not quite sure. So I try to keep it a bit off that for that reason. But let's look at AMD, because where is AMD? If I got it, here we go. These guys have been doing really well, but their share price is incredibly low as well. And again, it's just part of the big tech sell-off. I am very bullish on them. If you look at their numbers, if you actually look at their P&L and you look at the growth, it is insane. These guys are dominating the processor manufacturing globally, like, by a long way. They are destroying Intel, and Intel doesn't seem to want to be catching up. Intel is just dropping further and further behind. And when we're going to be entering Q3 this year, which is the cycle when they begin releasing all of their new stuff, we're talking like July to October sort of period, that's when things can get really exciting, because these guys have been knocking out of the park for a while. But they also have 2 other big markets which are really important, because they have been, I think the last quarter, they had, I think, a 300% quarter on quarter, not quarter on quarter, a year, the same quarter last year, I think, on the same quarter growth on the server element, and that is only going to get bigger as people use cloud computing services more, as more online services begin existing, as more smart devices begin existing, all of that kind of stuff. I mean, we've talked about the shortage of semiconductors. As the shortage of semiconductors is not there because there isn't enough raw materials. It isn't there because they're not producing fast enough. It's because the demand is ramping up so hard that the companies are failing to meet that demand. You know, just 5 years ago, the majority of cars didn't really have like proper chips, like proper like computer level grade chips. And now all of them do, right? All of them have these complicated infotainment systems that have cameras, blah, blah, all that kind of stuff. Suddenly, like, all of the automotive industry is being reliant on semiconductors. Suddenly, like, every device has to become smart, and they have to be even more smart than they used to be. The world of work is changing, where the demand for computing power in a lot of industries has gone up a lot. There's a lot more complicated processing required for different like media industries, which maybe wasn't the case so much before, and those industries are exploding themselves. So there's a huge number of different reasons, and these guys are at the forefront. The third arm of their business is graphics cards, and they have been behind Nvidia for a long time, but they've sort of been closing the gap year on year a lot. And last time in Q4 last year, they got close with a 6000 series, but not quite there yet. And I think like they're probably a year or 2 away from being on par, and they have been on par in the past. They've got this new CEO. She is great. I mean, new, she's not very new, but newish, and she has been pushing them so hard, and I think that there's a massive amount more to come. That's why I am personally investing in them, but you need to go and make your own decisions. This is just a random guy on the internet. Do not listen to random guys on the internet. Go and do your own research, do your own math, build your own models, decide what your own share price should is based on your personal views. Should it be sort of in the $100 territory plus, like some person on the internet says, or should it not be? You make your own decisions. Well, there we go. People are saying, are Apple M1 chips the best now? They are great as a, like, for mid-tier, like mass market computing and stuff like that, but they are still quite a way off on proper like production grade, professional grade, and all of those kind of levels, but also at the cheaper end of the market, because Apple M1 is obviously limited to Apple, and Apple devices are naturally considerably more expensive within each class than alternatives elsewhere, and the majority of devices out there are still not Apple. And so that means that you still have this like it's like Apple iPhone is the biggest number one handset out there, but yet, you know, Android phones are still the vast majority of the market. It's the same kind of principle there. So that's why I'm particularly bullish. Massimo is asking about CCIV. You'll have to rewind the video. We did talk about it for quite a bit. Anyway, let's talk about some of the other companies. So Nvidia here, similar pattern to what AMD has been doing, but they haven't been dropping as much. That's because AMD has had their own specific news coming out, etc. Fiverr and Etsy, they're interesting because what are we one day? So they've been dropping a lot. Look at what Fiverr has been doing, and Fiverr in particular. So they had some really bad results come out, and so they had this like big stellar fall. They kind of doubled up, so they had the bad results. They had the tech sell-off, but again, I think the world in which these guys are operating is only going to be exploding over the next 5 to 10 years. We're talking a lot more smaller contractors, smaller independent workers, companies employing people for specific jobs rather than having them sit in the office and only being utilized like a few weeks in every quarter. You know, like you need your graphic designer to go and do something, you go and hire somebody from elsewhere, pay them for the job, don't have to like have all the hassle. And this is going to only increase, in my personal opinion, and that's where the world is going. And I think the last 12 months have accelerated that. And the problem with a lot of these companies, like Fiverr is probably the best example of this, is that people saw the acceleration and then they saw a slowdown in the beginning of this year. And they're like, oh, well, the acceleration has stopped. And what I think, in my opinion, they're not really taking into consideration is that we've just had a lot of future growth, maybe over the next 12 months or maybe 18 months, sort of forward flowed to the last 12 because people had to go and do things that they otherwise would have taken longer to do. You know, remote working, all of these kind of things. And so we're kind of looking at it going, so, okay, so some of that has been flown forward, but does that mean that the rest of the growth will not happen? Does that mean we're going to stop doing these things in the future? I don't think we will. I think the world of being able to hire like a great graphic designer from India or China or like Malaysia or somewhere else to be able to go and do a job for you and pay them a very good rate for Malaysia, but to you it only costs like 30 quid or 40 quid, where having a full-time graphic designer in-house is going to cost you considerably more. I think that is not going to change, and that's only going to continue. So anyway, there is me. But is Texas, so somebody's saying, I'm talking about NVIDIA AMD, is Texas Instruments as big as them? And so there's a lot of companies below that. In my video about man versus market, I went and bought a Micron. They're a similar player. There's a lot of people who are sort of, there are essentially like 3 tiers of people that play in the semiconductor space that I'm super excited by. So there's like companies like Intel, AMD, NVIDIA, all these kind of ones. They're sort of like the final producers of, okay, maybe there's 4 tiers. They're the final producers of the parts, right? They produce the processor, or they produce the graphics card or something like that. Then above them sit like the Samsungs and the HPs and all of these kind of companies that like produce the final product, right? They produce the actual computer, or they produce the radio or the whatever. Then below the producers of the parts sit some of the guys that these producers of parts use for large chunks. You know, like if you go and look at the schematic or the board inside in a computer, you'll notice these little like black chips on them, and a lot of them will have the stamp of the company. You'll see Qualcomm on there, you'll see Micron on there, you'll see all of these little companies like Texas Instruments manufacture a ton of that kind of stuff. You'll see all of these guys, they're like the guys who produce the bits that then go to produce the computer parts. And then there's the actual manufacturers of the actual chipsets. Oh, look, I got a dividend. Wow, 87 cents. Oh no, 73 cents. Texas Instruments. Talk about the devil. 73 cents. I'm very grateful. Anyway, so then there's the people right at the bottom who are literally like printing the actual tiny little semiconductor, like the processors and whatever, the individual things that then make up the parts that the other guys make. And this is like, the best example is probably TCMC. So these guys are based in Taiwan. They are the biggest in the world. They produce stuff for Apple, for AMD, they produce a lot of the big stuff. Samsung is the biggest competitor. Samsung actually play in the actual manufacturing space as well. But the Taiwan semiconductor guys are investing in huge new tech. They're going down to 5 nanometer and reportedly going down to 3 at some point soon after that. And those are big tech steps. Those are really big tech steps. So these guys are essentially like the guys underpinning the entire tech stack of like most of the big companies. And so that's why I'm sitting there going, like, will Tesla do well? Will CCIV do well? Will Volkswagen and Mercedes do well? I don't know, but you look at these TSMC guys, they're the ones manufacturing it for all of them. So whichever out of those guys does well, those guys will definitely do well anyway. So I kind of like those stocks for that. So there we go. One of my channel members, Ostrex, has asked the question. See, like I have many, a whole 5 of them. So thank you very much for joining the chat. I really appreciate it. Thank you very much for supporting the channel. It's very kind. So yeah, let's quickly talk about what's happening with crypto, because this this has been incredible. If anyone has not heard, crypto is being destroyed. Elon Musk went and smacked them with his fist like 3 or 4 times, really big, by like saying stuff that everyone already knew, but saying stuff in such a way where it just sent things plummeting. And we're talking like really sent things plummeting. So he like, it's kind of interesting because if you look at the history, he actually was responsible for a lot of this growth here as well. So Tesla went and bought a bunch of Bitcoin in the first place. That went and sent the share price to like this cap over here, but nobody really like had much of an issue with that. But then Elon came out with a few different things about Bitcoin specifically. He said that the algorithm is too power hungry, and that probably is true. I made a whole video where I talked specifically about that. He then went and hit them again by saying that, but by alluding to the fact that maybe Tesla sold the shares by replying indeed to somebody else's tweet, which said, has Tesla sold the shares before Elon made some announcements? It later was confirmed that they didn't. So the Tesla Q2 report is going to be interesting because they will have, in terms of like cash holdings, taken a massive drop if this continues. So that's going to be quite interesting. But anyway, everything else followed and it kind of unraveled. And I think the fact that people are sort of joking about the space so much, the fact that we have like albeit at one point the richest guy in the world, maybe not quite so right now, but the fact that he can make a tweet and send an entire market either spiraling up or crashing down. If you take a big step back, even if you're a big believer in crypto, I believe in the technology. I love some of the like uniqueness of it. But if you take a step back, the fact that he can go and do that kind of shows the maturity of the market. It shows that that entire market overall is still very, very infantile in its growth and development. We still don't really have any proper practical uses. Like sure, in some coffee shops that are very modern, you can kind of pay in Bitcoin to buy a coffee, but that's not real, genuine, proper adoption. And Tesla announced for a few weeks that you might be able to go and buy, but we're not really seeing, like, despite it being around for, like a good, like, what is it, 12 years now, we still haven't had like that proper adoption. Like look at tech that's been around for 14 years. The first iPhone came out in 2007. That's 14 years ago. That's only marginally before Bitcoin was created, and that kind of side of things has certainly changed the world in a much, much bigger way. And I think it's easy to kind of think, well, like it takes time. Sure, things do take time, but we're not really seeing that adoption. And it could be that we're just very early in this process and we're just not ready as a society to be adopting this just yet. The governments are certainly not liking it. China today, well, over the last 24 hours, have basically as good as banned everything crypto related, which is sending really negative shockwaves through, because although their approach might be a little bit on the extreme end of things, they're kind of prohibiting their banks and any financial institutions from dealing with or enabling transactions to from crypto, etc., or funding them. DCJM could be somebody called Dave, possibly, is saying Elon can make crypto cash single-handedly in the same way as I can pop a balloon with just a pin. That's a very good analogy there. But yes, so we've seen I just think we're maybe too early and we haven't figured out exactly how we're going to be using these kind of things yet. And so although there's a lot of expectation, the expectation is failing to materialize. And so the question mark is, are we going to be having genuine use cases and beyond just investing and waiting for the price to grow and then selling, but actual like benefit over using fiat at some point in the future? But also the big question mark is, are countries' regulators going to eventually begin in countries like the US, the UK, Europe, etc.? Are they going to be looking at this and saying, we need to do something about this? Because look, I am a big proponent of like a lot of liberal things. I'm a big proponent of technology and advancing things. But I am really not a big proponent of a situation where we have, any random person with absolutely zero technical background, with questions around who actually is behind the thing, etc. Setting up any random coin, getting hundreds of thousands, millions of people to go and invest in this thing. Everyone's sitting there going, hey, I made 10,000% in the last 2 weeks. You know nothing. I'm like we have real problems where people are spinning up Ponzi schemes, or just, they don't even have to be Ponzi schemes. Some of these it's just like a pump kind of scheme. So you create a coin at the beginning when nobody's heard of the coin. You go and accrue a large amount of this coin, potentially split between a few thousand addresses. Then you go and hype it up and get lots of people excited. And while the hype is sort of self-accelerating, the price is growing, and then that creates more hype and that creates more price growing, and so on and so on. You go and sell a bunch of your coin and you make a load of money. Like, if you take a step back from liking the crypto, if you're in that space, it probably could do with some kind of regulation around it, because it's not good. It's not really solving any issues. It's not creating any genuine solutions to problems that exist. It's just creating these pump and dump schemes by the thousand. And I kind of feel like it will probably improve the situation of crypto. It'd probably help it establish, if there was regulation that meant that the stuff that does exist could potentially develop use cases and actually be trusted and actually have, like some kind of vetting potentially. If you create like any other asset that people go and invest their money in, you have to jump through massive hoops. And so will we see that? And I think maybe with what's been happening over the last few months, there is an increased risk of that happening, which is probably affecting the prices as well. Sorry, I've been talking for like an hour and I had about 2 sips of tea. So anyway, let's quickly go and look at what's happening in the markets, and then I'm going to jump off so that everyone can go and have a nice evening. Fiverr is not doing well. Where is Tesla? Let's have a look at Tesla. Tesla, slight rise from the 550 territory where it's sitting for a few hours. So we're, 3 hours into the trading cycle, and we're $10 above the 550, still extremely low. I mean, like, how long has it been since we've had this sort of price? I mean, excluding the recent fluctuations. Set it too high. One day. So we're really talking like we're going back to, again, November last year for this price. And look, we're not far off these peaks over here from August, which is like, are we going to be testing the $500 territory? I mean, like, every day you kind of think, can it go even further? And you say, no way it can go further, but then it does. I thought there's just no way it's going to be dropping to like 550 territory because people will be buying up, but here we are. 560 is a rise for the day. That's the situation we're finding ourselves in. What are people saying? Is Tesla buy right now? I can't tell you, unfortunately, because that would literally be financial advice. I personally am buying quite a bit with the little funds that I have. I actually haven't been able to invest very much this month at all because I've been having other priorities. But hey, everyone needs to make their own decisions. What's happening with CCIV? The same story. What's happening with Pound? Yeah, nothing much has changed really. So I think like much of the stuff that we discussed is still holding. But what is $10 worth of Tesla? Was State gonna try that? $10 worth of Tesla with a free share? Yeah. If anyone wants to, just before we close out, if anyone wants to go and try stake out, if you're interested in finding out more about it, check my video first, because there's some big downsides with it. You can't get an ISA, you have to wait for your money to turn up, a bunch of other stuff, some of the data is not as good as here. But if you want to try them out and get a free share, feel free to use my link, and I'd really appreciate it if you do. So thank you very much for anyone trying it out in advance. I'm going to go and try to think of some useful stuff to talk about tomorrow, because you would not believe how bored I am talking about SafeMoon. Luckily for me, today's video completely tanked. I think because the price has tanked, and it's one of those where when the price is going up, everyone's super excited and wants to like watch every video and tell you that you suck and that you're ugly and that you know nothing. But when the price tanks, suddenly all of these guys jump off and they go and want to watch something else. So today's video tanked, which is really good, because it means I probably will stop talking about it. I didn't have a choice when they keep watching those videos. What else I'm going to do? So hopefully back to good quality financial education content starting tomorrow. Thank you very much for watching this live. I really, really appreciate everyone joining. Thank you so much. Thank you to my one channel member. I think there's a one channel member that made it. I apologize if I didn't see anyone else. But if anyone else wants to join our tiny little club, I'll be very, very appreciative. Thank you so much, and I'll see you guys later.